Okay, so just a quick background of myself. I'm JaviFX, and as the FX states, Forex, right? So I started in Forex in 2021 using this same strat, right? Supply and demand. And I've been in crypto since around December 2023 up until this point. Again, still using this strat with an addition of the 200 EMA. So let me run down through the bread and butter of this strategy, right? So our foundation will always be market structures, right? No matter what strategy it will be, everything is reliant on market structures, right? Higher highs, higher lows, lower highs, and lower lows, etc. Next, we have the 200 EMA. This is for the mostly direction or trend of the market, right? If it's bullish or bearish, and also possible entries, though I use this more on direction. Next, we have supply and demand entries, right? So let's start with market structures, right? This is the foundation of any strategy, may it be my strategy or like a trendline strategy. Everything must build from market structures, right? So let me draw this real quick. Right. So, like I've said, right, market structures could be higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low. Now, what happens if a price fails to make another higher high? For example, we get this, right? Technically, we call this a failed high, right? A failed high, because we can't immediately say that it's a lower high, because, you know, what if it makes a failed high and then suddenly like shoots up, right? So where is the confirmation? The confirmation is when we break structure to the downside, and then we start the lower high. So this is now the lower low because it broke structure, failed high, and then followed by a lower high, a lower low, lower high, lower low, so forth, right? So why is this important, right? Why is this important? Because we obviously use higher time frames to dictate where we are in the market, or longer time frames. For example, we use the daily if you want to see like a span of like a week or like a few days of what we want to expect price to do, because obviously a 5 minute time frame will have lesser priority than a 1 hour or 4 hour or even daily, right? So that's one thing to keep in mind. This is for us to know where we are. Know where we are. For example, I'll give you guys an easy example. What if we're here? What if the market, you know, at this particular point in time is in, zoom it in a little bit. What if we're here? Right? What if we're here? Or let's make it easier. What if we are here? Right? So we've made a series of higher lows, higher highs, higher low, higher high. So knowing we're in a bullish trend, knowing we consistently make higher highs and higher lows, what is our assumption, right? Our assumption is that we will create another higher high. So we wouldn't be confused. We wouldn't short out of nowhere, right? Because as we all know, bullish trend should be long, right? We would long bullish trends because there's the assumption that we create another higher high, right? That's why it's very important to know where we are in a specific trend. So how do we apply this failed high, right? So like I've said, there's an assumption, quote unquote assumption, right? Because we can't 100% predict where the market will go. So we assume, we predict based on criteria or our edge, right? So this is a failed high. Let's go here. We have a higher high and a higher low. So for example, we're here. So the assumption is that higher highs and higher lows will continue to create more higher highs and higher lows unless a trend is broken. So what's the earliest sign of a trend break? For this case, a failed high. So let's say you took a long here and he got stop lost, right? You can't really tell that the trend is broken unless we create a lower high or a lower low, right? We break structure. Now, the trend is broken. So let me ask you, if a bullish trend is broken and a bearish trend has been established, what do you do? Do you still long? Obviously not, right? We go short, as anyone would. So let's use the same principle of knowing where we are in a specific trend. So for example, we are over here. So again, we assume. What is the assumption? We've created lower lows, lower highs. What is the next assumption? The next assumption is that we create another lower low, right? So we wouldn't be longing out of nowhere. We'd actually take a short, right? For easy, for an easy trade, you can easily just target this, knowing that we're going to create a lower low, right? Simple as that. Now, one big thing that we have to know is break of structures, right? I've mentioned it a while ago. So what is a break of structure? So let's remove this and let's continue this. So a break of structure is when this established range has been broken, right? Simple as that. Very simple. So again, let's tie this all together. So we're in a bullish trend. So what do we assume? We assume higher highs and higher lows. Okay. Now, we continue to break structure. Break structure means we create new highs, right? Break of structure to the upside. That's what we call it. Upside because we're going higher in a bullish trend. Now, if we go to the bearish example, so let's apply this, in a practical sense. So again, we assume in a bullish trend, we create higher highs and higher lows. Now what happens? We have a failed high plus a break of structure. To where? To the downside, right? We have a break of structure to the downside. Now, this in itself is already indicative of a possible, trend break or trend continuation. In this case, a continuation of a bearish trend, right? So we're consistently breaking structure to the downside, right? Establishing our bearish trend. Now, how do we know what a true break of structure is? Right? So clear this up. Okay, clear this. So for example, let's draw something. One. Here we go. So we may get these examples in real time. So the break of structure here isn't, this, the real break of structure, by the way. For example, this is the daily. Because later on, I'll show you how to capitalize on these, smaller break of structures in the lower time frame. But let's just assume this is the daily, because I would like to follow the daily. The daily or the weekly, they have the highest priority, right? So let's use this. On the daily, where's the break of structure, right? You've been listening to me, the break of structure would be here, because this would mark the higher high, right? This is now the higher high, right? And all bullish trends should not break structure to the downside, right? So let's say we get this as our higher low. We don't always get it at the start. Now we may mess around here, and then there we go again. Break of structure, right? So we can flip this around for the bearish example, right? Just messing around, and then we suddenly go down, right? We see this a lot. We see a fake out break of structure here, right? But then in reality, for us to say it's a break of structure to the upside, we'll have to break this. So we broke structure here, right? So now we're establishing the lower lows, right? And like I've said, we shouldn't be breaking this. So we should do this, lower high, and then another lower low, right? More break of structure. And then lower high, lower low, right? It's that simple, guys. That simple. Now, if you want it easier, there should be a range to establish. For example, this is our low, and this is our high, right? This will be our high. This is our low. This is our high. Now, the simplest way to know if it's a break of structure, if it breaks the high or it breaks the low. See, it's really that simple. Now, let's pull up Bitcoin here to show market structures, right? So let's go all the way back. Here we are. Okay. Let's go back to where the data can take us, right? So let's say we have this high over here, and then this is the break of structure. Let's use the term BOSS, or break of structure. So break of structure, it is caused by what? By this, basically. So let's say we'll use this as our low, because I'll teach you this later, but this is a demand zone, right? This is a demand zone. Let's just, I'll teach you guys later. That's a demand zone, right? And these breaks of structure, not really that convincing, right? Not really that convincing, but for the sake of this video, right, let's just use the highest point. So here. So now, right, I'll show you guys the importance of knowing where you are, or simply know where you are. Okay, so up until this point, we've established higher highs and higher lows, right? So for example, this is our higher high. What are we expecting? A higher low, right? We're expecting a higher low. So people in this area right here will be shocked. They're like, oh shit, what a candle, right? What a red candle, right? So this is the importance of knowing where you are. In a bullish trend, do we short? Well, if you want to scalp, you can, but in this daily example, we don't want to short this because we're bullish, right? So, for example, we're here, right? Or we're here, or even here, and you know that our low is intact. What is your assumption? What is your assumption? This will be our higher low. That's our assumption. This right here, the structure right here is our higher low. And with the formation of a higher low, what is our assumption? Right? Let's say you took a long here using one of our models, which I'll teach later on. Let's say you took a long here. Let's just say, for example, right? You took a long here and you tell yourself, okay, the assumption is that with the formation of a higher low, there must be a higher high, right? It's just how the market works. Bullish trend always creates higher highs and higher lows. So, guess what? We, in fact, created a higher high. Now let's continue. I will get back to this later. So, we're just creating higher highs, right? This is parabolic now. Parabolic with barely any like pullbacks. So, example I've used, this is the high, right? This is the low. We broken structure, right? Just keep creating higher highs. Oh, by the way, break of structure should be candle bodies. Candle body closes. Candle body closes. What do I mean by that? This is a candle body, not a wick close, because a wick close could entail a sweep, which we will talk about later on. So for now, let's just continue the exercise. We broke structure here. This will be our low. This will be our high. We broke structure here. This one. This will be our high. We broke structure, and this will be our low. Right? Goes on and on and on and on and on and on. And the body. This will be our high. And since this is just one whole move, technically this will be our low, right? So what do you see? We see continuous higher highs and higher lows, right? Because we're in a bullish market. That's right. So here we go. Higher high again. Broke structure there. This will be our low because this is just one whole structure. So continuing the exercise, this really just goes parabolic, right? So let's say, let me show you an example of our failed high attempt here. So like I've said, we've just continued to create higher highs, right? It's a higher high, and this is technically just one big structure. And this is our first sign. What happened here? We broke structure. Okay, we broke structure. So you can tell yourself, this seems to be a trend shift from a bullish scenario we're now possibly, remember, possibly turning bearish. Why do I say possibly? Because a bearish trend has not been established just yet, right? So let me show you like how it works. So this is a failed high, right? Why is it a failed high? Obviously, in a bullish market, like I keep saying, we assume that, you know, we make consistent higher highs and higher lows. But in this case, it did not create a higher high. So that's what you call a failed high. And your first clue was already this break of structure. So what happened? A failed high into more breaks of structure, right? So at this point, we can say that, okay, price has entered, you know, bearish conditions. So again, know where you are. Know where you are. So let me give you an example. You're here, right? We failed high, break of structure. You're here. What do you do? Right? I'll give you some time to answer. What do you do? Do you long or do you short? Right? You short. Because again, failed high, break of structure. Now we've switched to a bearish condition, bearish scenario. So we're now on the way to create lower lows and lower highs, right? And that's exactly what happened for this particular price action, right? So we broke structure. Oops. We broke structure. This is one whole move right here, starting from here actually, right? So now here is the opposite of a failed high. Now this is a failed low, because it didn't break this structure. Actually, we can put this over here because this was a technically a pullback, this one. So this could be our lower high, could be. So there's a failed low here. Now you can just skip this price action because there's no trigger, we're range bound, and honestly the strat doesn't work that well in range bound conditions because we thrive on trends like higher highs and higher lows, lower highs and lower lows. We thrive on that. So again, failed low, what happens? We broke this, right? We broke this, and then what? This now becomes our range. Since this has no pullback yet, we can assume this is our low and this is our high, you know, another break of structure, right? And this just whole move, it just confirms that we are technically bullish already, right? Because we've broken out, we're creating, you know, higher highs and higher lows, right? Market's not perfect. You could argue that, you know, this is break of structure, this one here, this is the low, then we're technically, you know, just keep breaking structure. On the lower time frames, I'm sure I would have taken a trade here, which is good. And then we see this dip over here, and you tell yourself, wait a minute, could this be just one structure? Could it be just one structure? And this could be our high, and this could still be our low. So our low wasn't breached, right? Our low wasn't breached, and we continue to make higher highs, right? And just the cycle continues. Higher highs, higher lows, higher highs, higher lows. we break, right? That's some foundationals that you guys need to take to heart to understand. Let's go back. Know where you are. If you know where you are, you know how to trade. If you know where you are, right? If you know where you are, you know if you should long, if you should short, if you should stay out of the market in range bound conditions, right? So for the first, introduction, foundationals, simple. Know where you are, know your ranges. Like I've said, where the lower low is, where the lower high is, where the higher low is, where the higher high is. Know your ranges. Know your range breaks, right? Know your breakup structures. Because this is what, if you know this, then almost any strat could be easy for you, right? Okay, so that's lesson 1. This is the first video of a 3 to 4 video series. So see you in the next.